Good afternoon from the floor of the CME. This is Chris Robinson with your weekly comment here for Traders Exclusive, talking about the grains and livestock. Right behind me, down below, that is what's left of the live cattle pit. There's still some guys trading options in there. What are we looking at in the grains? Continued volatility, continued concern about weather. This has been a weather market. Typically, corn is made, quote unquote, the crop's made in July. There's only about 3 or 4 business days left in July. On Monday, the 31st, that's the last day, trading day of July, then we move into August. So for all intents and purposes, most of the weather risk for corn is behind us. There could be some concern later in the next 2 weeks or so. If we don't get timely rains, it could decrease the yield. But all in all, I think you see that fact reflected in the market. Corn has been in a narrow trading range for 10 months. Pull up a chart and look at the 200-day moving average in corn. It's flat, okay? It's been very, very, very flat. There hasn't been a lot of action either way. We had a little bit of a rally earlier this year. Most producers really needed to see 420 on the board. We got the 417. As I speak to you now this morning, we're trading around 385 to 390. The big concern is if the 375 level does not hold, that opens up a fresh round of selling, and it could drive prices to go test last year's August low, which on the chart is around 358 to 360. So those are the levels people are looking at, and it really comes down, it's a coin flip. You know, flip the coin. Are we going to get weather, which will give us a decrease in yield? Are we going to get some weather story between now and harvest? Are we going to get a frost that's going to damage the yield? Because that's what's driving the corn market now. The managed funds are still out of position. They came in this week, they were long and wrong. We had a pretty good sell-off. A lot of this sell-off has been fueled by them getting out of their long position. They're possibly flat right now. It's been a very frustrating year for managed money if they've been trading corn, because they were long at the top, they were short at the bottom, and they've been out of position quite a lot in the last 6 to 7 months. I watched that commitment to traders report carefully, not only for corn, wheat, and beans, but also for cattle. Switching over to cattle, the managed funds are still long about 80,000 contracts. Cattle, you have live cattle and feeder cattle. You need to take a look at that if you're looking for trade opportunities. If you pull up a chart, since last week's cattle on feed, we had a gap lower. We've been lower 5 days in a row. And live cattle especially, which is where the funds are long, is approaching really big support. Traders fear that if that level does not hold, there could be a new round of selling. So those are the things we look at. You got to watch money flow, I think, more than anything today, especially in these markets where we don't really have huge and supply-demand problems. So it's been an interesting year so far. We had a great rally early in the year in cattle. Cattle gained 40% off its lows. It looked like we were going to be well supported through the summer, and now we've hit a little bit of a hiccup here. I would watch these technical levels very carefully, because if the managed funds decides they need to get out of 90,000 or 80,000 contracts of cattle, that could really push us lower over the short term. That's about it. If you're looking for help with your trading or your hedging, give me a call. Chris Robinson.